Well, the bulls are in control. We're up 95 points odd. We've moved to the high point of the day. We were citing some of those, IT stocks. I think in the last few minutes, ITC as well has moved up. Remember, after we saw Godfrey Phillips come out with a good set of numbers, the fear was that ITC is losing some market share. So that stock did see some selling. Now it's gradually moving higher. And the big boy, HDFC Bank, has moved higher. Yes, it's up only around 0.5%, but the majority of that move has come just in the last few minutes or so. HDFC Bank moving to the high point of the day helps the Nifty Bank, helps the Nifty as well.
I just want to point out Vodafone Idea because that has slipped 8.5% after we got the TRAI numbers for June subscribers, which have showed that the company continues to lose subscribers at a fast pace. 8% gone on that counter. 41 lakh users or subscribers lost in the month of June itself. And this is after losing over 50 lakh subscribers in the prior month. But let's move on and talk about the RBI governor. He was speaking, Shaktikanta Das, earlier today.
Yeah, and we have Lata who's joining in to run us through all the key takeaways from that speech. Lata.
Well, quite a detailed speech from the governor and two very big takeaways for the market and the economy. One, that the Reserve Bank is gently nudging banks to link their lending rates to any external rate, mostly say repo rate, or of course to say maybe a T-bill rate. The Central Bank Governor Shaktikanta Das pointed out that while initially the rate cuts from the Reserve Bank had not been transmitted, lately in the past couple of weeks, many banks or quite a few banks have linked some of their rates to external benchmarks like the repo rate. He said that RBI would like this to happen, although it had put the external benchmarks panel report in abeyance because of a lot of discussion with the banks. Now it is, he says, the time has come to formalize the link between lending rates of banks and any external benchmark like a repo or whatever the bank wants to pick. So it looks like something formal will come because those were the words he used. The time has come to formalize the linking of lending rates to external benchmarks. The second major thing he said was actually a reiteration of what he had said at the end of the monetary policy press conference. He said that the Reserve Bank is keeping a very close watch on the interconnectedness between NBFCs and the financial system, as well as the top 50 NBFCs and the movement of their asset quality. He said that it will be the endeavor of the Reserve Bank to not allow another NBFC to collapse, obviously referring to IL&FS as the first one. Let's listen to what he had to say.
After the last MPC, where we increased the policy rate by 35 basis points, on the same day and thereafter, various banks have now announced initiatives to link their lending rates in respect of new loans to the repo rate. This is an initiative which the banks have been taking. Several private and public sector banks have subsequently and in the last few days have announced their decisions in this regard. Our expectation is that they should move faster. Reserve Bank will definitely play its role as a regulator to work with the banks, to see the trends in the market and take steps that can formalize these linking of new loans to repo rates or to external benchmarks. The buildup of risks among regulated entities due to interconnectedness, exposure concentrations, non-transparent market practices, governance deficiencies, and their contagion effects have repercussions for financial stability. In this regard, the Reserve Bank is keeping a close watch on interconnectedness of the banks and non-banks. The Reserve Bank keeps a close watch on these interlinkages to ensure financial stability and to create an ecosystem where all these entities, where all these initiatives play a more vigorous and robust role in the economy. Including HFCs, the size of NBFC sector constitutes about 25% of the combined balance sheet of scheduled commercial banks. The Reserve Bank is now the regulatory functions in respect of the housing finance companies have just been transferred to the RBI. We have reiterated that all the regulatory norms which the national, which were in place earlier, that they shall continue to the, all the regulatory norms which were put in place by the National Housing Bank, they will continue. And in the meantime, we are also engaged with stakeholders, and we are internally analyzing what kind of regulatory changes or modifications or improvements that would be required.
Those were the key takeaways. There were two things that the governor said. One, that the Reserve Bank and the MPC has kept growth as the big priority. That gives some hope that there will be more rate cuts perhaps, or some other way of bolstering the economy. The other takeaway is that the offshore derivatives market will be brought onshore. This is following the recommendation of the Usha Thorat committee. Remember, there's something called an NDS, the non-deliverable forwards market, which is rupee traded outside. The endeavor of the Reserve Bank will be to bring that to the onshore by giving some SOPs to non-resident Indians who trade in derivatives. And another takeaway was that the Reserve Bank has given its inputs to the government on PSU bank reform. That is important because my colleague Ritu broke the story that the Department of Financial Services is goading public sector banks to align their priorities and to ideate and instill some inherent reforms in that segment.
Okay, Lata, thank you very much for joining in. By the way, keep your eye on Yes Bank. It continues to fall, and now it's down about 8 to 9% from its QIP price of about 83.5. Stock is down 2.5%. As we wrap up on Halftime Report, we leave you with some market opinion coming in from Ramdev Agrawal, the co-founder of Motilal Oswal Financial Services.
I think that clearly there are ideas which are showing up now. And it's going to be a lot of fun looking at the companies which were used to buy at 20p, 25p, or used to feel uneasy about not buying or looking at them. Now they are available at 12p, 13p. So yes, clearly values are emerging, in at least in mid-cap space it is clearly emerging. We would wish that the fall is over, but I mean, who knows? I mean, at what pace the government steps in and all the measures which are taken to fight this cycle, tackles it, because these things take time. And if by chance the liquidity transmission, one is of course you cut the rates, but is the liquidity going to the right people and getting transmitted very quickly to the people who need, say, NBFCs or auto dealers or the buyers of basically the consumers? I think that may take time.